If you own a home in Ontario and you want to buy the next one, but somehow you feel stuck because you need the sales proceed first to fund the new purchase. So have you ever wondered about the how to purchase your next home without needing to sell your current home first? If you find yourself in this situation and feel uncertain about the steps to take, stick around. This video is designed for you. Let's dive in. This question been a recurring theme among many people, not just my viewers. I hear these questions a lot from people who wants to upgrade their living space. They often feel compelled to sell their existing property first so they can access the necessary funds, and they worry about carrying two mortgages at the same time. In some cases, it is possible to secure a mortgage for the new purchase of a property while still owning your current one. However, this depends on multiple factors like your income, your credit worthiness, and it is essential to consult with a lender. In this video, I'm going to share with you some of my clients' stories who managed to purchase a new property without selling their current or existing one. I'm Ilham Ibrahim, your trusted real estate agent in the GTA. I see this problem a lot. In this video, I'm going to clarify to you how to purchase your next home before selling your existing property. The first solution is a bridge loan. A bridge loan is one of the mostly wide-used solution in Ontario. It's typically provided by large banks or credit unions. Homeowners use this solution when they have sold their existing property, but the sales have not officially closed yet. But they still need the money to finalize the purchase of the next home. So simply this loan, it covers a short period of time between selling one property, which is your current property, and closing on the next one, which is your next purchase or the new purchase. The bridge loan is usually a secured loan, secured by the final purchase and sale agreement. And it's a short term by design, usually spanning between few days to several weeks. And the interest on this loan, it's a daily interest. And often it's higher than your regular mortgage interest rate. So recently, one of the clients I worked with, they were looking to upgrade their home because their family was growing. And I helped them find the perfect new home. Their current home sold, but they had weeks to closing, and they feared to lose their current home. So they managed with the bank to get a bridge loan to cover the gap between the new purchase and the sale of their property. And this loan allowed for a smooth transitioning between the two transactions. This solution is very convenient because you can obtain it and arrange it with the bank in a matter of few days. And it's convenient because it helps people when they are in a tight spot and wants to buy the new purchase, the new home, but they have not received the fund and the sales of proceed from the current property, the sale of their current property. So they turn to this option to close the gap between the two transactions. The sale. This solution is simple, swift, and practical, but there is a small risk associated with it. The primary concern, I would say, is sometimes the closing of the current property might take longer than anticipated, which might result you paying an extended interest rate on the bridge loan. And since interest is calculated daily and the interest rate is higher than your regular mortgage, so it might cause a little bit of extra payment. And that delay in closing can increase the overall cost. In addition to that, the bank usually requires a solid purchase and sale agreement on your current property, the sale of your current property. So in case of the transaction falls through or the buyer withdraw from the transaction for any reason, in that case, the homeowner might encounter financial strain and it would need to seek a quick solution. So the bridge loan is more suitable for people who have almost guaranteed sale of their current home and a clear closing timeline. Another popular solution in Ontario, it's called lease back or sometimes they call it a post-closing leaseback, or sometimes I've heard occupancy after selling a home. In this scenario, the seller finalized the sale of their current or existing property, but stays in the property for a short agreed upon period of time until they complete and finalize the purchase of their next home or the new property. And this is usually arranged through a clause added to the purchase and sale agreement, or arranged by a lawyer who arranged an agreement. It's called use and occupancy agreement. During this period of time where the sellers occupy their sold property for a short period of time, the seller usually pays a daily or monthly payments to the new buyer. Often it covers mortgage interest, taxes, and additional costs. But I want you to know that this kind of arrangement is not regulated by the Residential Tenancies Act because it's a temporary contract with a clear end date. This solution became popular when the market was low in supply and is still used in today's market just to help the seller smooth the transitioning between selling a property and moving to the new one. So one of my clients used this solution. They wanted to sell their condo and move to a home, a bigger home. So I helped them find their new home, and it required 20% down payment. Part of that 20% down payment relied on their selling their condo, the current condo. So they arranged with the new buyer to stay in their sold condo for 30 days after closing. They arranged that through a use and occupancy agreement arranged by a lawyer. So this solution, it gives the seller more flexibility with the timing. However, it comes with contractual risk that need careful attention. So when the seller stays for a short period of time in their sold property after closing, they are no longer the owner of the property because it's sold to the new buyer. Any delay in vacating the property after the agreed upon determined date could result in fees and legal consequences. That's one risk. The other risk could happen is any damage happens to the property during that occupancy time if the agreement does not clearly outline this, who's responsible for what, and if there's no insurance. And this arrangement, this solution is not regulated by the Residential Tenancies Act. Third solution to this situation is the home equity line of credit. It's another solution for homeowners in Ontario to use their home equity to bridge the gap between selling one property and buying the other one. So this solution simply allows homeowners to borrow against the equity of their current home and use that fund as a down payment for their next purchase. One thing that you need to keep in mind, getting approved for home equity line of credit, it takes steps exactly like applying for a regular mortgage. That includes home appraisal, verification of income, and credit check. And so the process may take several weeks. The biggest advantage of this solution is the interest rate on the home equity line of credit. It's a lot less than the interest on a bridge loan. Also, the interest applied only on the used amount of the home equity line of credit. This approach is more suitable for people who can handle owning two properties on the same time and who have a clear and reliable plan to sell their current property after closing on the new one. Usually lenders in Canada examine buyers if they can handle the financial load of owning two properties for a short period of time in the same time. I want you to know that these options are not rare solutions or unusual options. They are legitimate tools buyers use every day. The real key here is knowing which option, which solution is more fit for your financial situation, timing, and comfort with risk. So I hope you found this information helpful today. And thank you so much for watching today and get your dose of clarity before the sales. And if you like this video, I would highly appreciate it if you subscribe to the channel and like and comments. That would mean a lot to me. My main goal is to provide a clarity before the sale, to help buyers and sellers make sound decisions. And I will see you next video.